Hey friends, welcome back to another episode of Making Sense of Your Markets. Today is Saturday. It's April 23rd, 2022. I spoke to a great group of real estate agents yesterday on the importance of understanding what inflation, a recession, rising mortgage rates, limited housing inventory, all of that has on the housing market and how to relay that and explain that to our clients. And a lot came out of that. And I ended up spending a lot of time talking after the class about the Home Affordability Index. And no one's really talking about this right now. They're focused on rising interest rates. They're focused on rising home values, but they're not keeping an eye on the Home Affordability Index. And so today I want to explain what the Home Affordability Index is and how important that is to understanding where the markets are going right now relative to rising interest rates, rising home values. But the thing people aren't paying attention to is income. Okay, so the Home Affordability Index takes into consideration the average income for average homeowners in average price points. So we're going to talk about that in a minute, but every week I bring you an update on our mortgage rates up or down week over week. This week they're up. We're over 5%. So 30-year fixed rates are now at 5 to 5.25. Sometimes we had to even lock a couple interest rates higher than that this week due to credit scores and limited down payment. So depending on your credit score, down payment, type of property purchased, 30-year fixed rates are now over 5%. It's all good. Don't worry about that. I'm going to start sharing a lot of information like I shared yesterday, historical information and data that loops in stuff like the Home Affordability Index and other market stats that show that we're still in a very, very healthy market, and a 5% 30-year fixed is not bad. We've just been conditioned to 3% 30-year fixed over the last 8 years. So what is the Home Affordability Index? The Home Affordability Index measures whether or not a typical family earns enough income to qualify for a 30-year fixed rate mortgage on a typical single-family home without spending, get this, without spending more than a quarter, 25% of their income on principal and interest. So a healthy Home Affordability Index would be at about 100 or higher. An unhealthy Home Affordability Index would be under 100. So you got to look back. Let's go back and look back in history. The best we saw, the worst we saw relative to a Home Affordability Index was right about in the 1980s, right at about 108 to 110. The best we saw was during the crash, right at or before the last crash, where home values were dropping and mortgage rates were low at 197. Currently, we're at 147 on the Home Affordability Index scale. So still a great time to purchase real estate, still a great time to qualify for real estate. That also shows the strength of our housing market right now. The other thing that people aren't considering is that incomes are up substantially over the last 12 to 15 years. That's a big thing. So let's keep an eye on that. A lot of people are focusing on interest rates going up right now. A lot of people are focusing on home values going up right now, but we got to keep an eye on the fact that even though 5%, 30-year fixed rates are at 5%, historically speaking, they're still down at the lower end of that spectrum. So if you have any questions on any of this info, if you're a real estate agent and you want to see the slide deck that I shared yesterday, it's 30 slides that absolutely brings a ton of clarity around inflation and recession and the strength of the housing market, mortgage market, reach out to me. If you're a home buyer or a homeowner or a client of mine, reach out to me if you have any questions or concerns. Happy to have a conversation with you on that. Now, I always wrap up every week. I'm coaching my team, myself, through a 52-week training program from the best-selling self-improvement book, The 7 Habits of Highly Effective People. We are on week 40, and it's titled Solve a Problem with Synergy. I'm going to read this quote by Helen Keller, no relation. Helen Keller says, "Alone we can do so little, together we can do so much." There's a problem that you have, don't try to tackle it on your own. Grab some help. Reach out to someone for some help. If you have any questions relative to mortgage and real estate, I'd love to be a resource. I'd love to help. Have a great weekend. I got some work to do around here. I'm going to have some fun this week, and I hope you do too. We'll see you next week.